Inside the software stock sell-off in this week's Fastest 4 Minutes in Finance. Hello and thanks for joining us. I'm Scott Inman. Software stocks have been wrecked so far in 2026. In fact, last week they collectively entered a bear market. An article by Business Insider this week included a performance chart of the iShares Expanded Tech Software ETF. It's down 27% since September. The rout on these stocks has been driven by fears that AI will replace or greatly reduce the demand for software. The plunge accelerated when AI company Anthropic released a new application that can access, read, and edit files. Our LPL Research team says the thinking is if internal development of these systems now takes developers less time with AI, why would anyone pay for software? We'll take a look at these two LPL charts. It shows the divergence between the performance of the Russell 1000 Software Subsector Index compared to the Russell 1000 Semiconductor Subsector Index. They are clearly going in opposite directions. AI optimism is clearly funneled into semiconductor stocks. The index is trading at about 43 times forward earnings, while the software index is trading at about 32 times forward earnings. Now, LPL thinks investors should take a breath. Software is not going the way of DVD rentals and film cameras. LPL writes that mass cancellations of enterprise software contracts in the short to medium term seem unlikely. They point to a recent webinar with analysts and IT executives in which JP Morgan discussed how it is not abandoning enterprise software because of AI. AI tools are being used, but adoption is practical and gradual. For large firms, a more realistic goal is to leverage AI tools to make existing users more productive, not to replace systems. The dream of giving AI agents read and write access to the files used to run large enterprises seems far away and fraught with risks and data privacy concerns. In fact, LPL believes there could be a floor to this software dip soon. They believe when looking at a software to semis ratio, software has been deeply oversold and is approaching a key support level. Bottom line, the development and application of artificial intelligence, as we know, is one of the biggest disruptors to our economy in history, and it has created a whipsaw effect with many industries battling to find their place in the AI future. Now more than ever, diversification matters. You don't want to make big bets on individual stocks or even individual sectors. This highlights the value of portfolio managers and working with a financial advisor to use diversification to reach your financial goals.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.